This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. Over the past week, there were 2,013 auctions held across the country, returning a clearance rate of 59.8%. Sydney held 698 auctions with a clearance rate of 59.7%. Melbourne held 766 auctions with a clearance rate of 62.5%. Brisbane held 109 auctions with a clearance rate of 57.8%. Adelaide held 69 auctions with a much higher clearance rate of 75.4%. The ACT held 48 auctions with a clearance rate of 60.4%. And in Western Australia, there were 682 private sales over the past week. For more on property, I'm joined by Eleanor Creagh from RBA Group. Eleanor, thanks for your time.
Thank you for
Despite all the wet weather over the East Coast this weekend, pretty strong auction clearance rates really across the country.
Yeah, I mean, auction clearance rates still holding pretty firm, still around that 60% mark nationally. And again, that's despite the uptick in auction volumes that we did see over the past weekend. So again, reflective of that continued strength in market conditions. So although we are starting to see the pace of price growth is slowing slightly in most capital city markets, price growth does remain pretty firm, and conditions are relatively firm, particularly in the smaller capital city markets and Sydney.
And how much stock is there still out there on the market right now?
Yeah, it's certainly an interesting picture, and we're seeing quite a bit of divergence in terms of price performance across the country, and a lot of that is related to the divergence in terms of the picture for what stock on market looks like across the country. So we know in the smaller capital city markets like Perth, Adelaide and Brisbane, total stock on market is incredibly constrained relative to historic averages, and buyers just don't have much choice. That's intensifying competition and seeing prices in those markets lifting at a faster pace. But in markets where we've got a lot more choice for buyers, a lot more stock. So markets like Melbourne, where total stock on market has been above historic average levels since around mid last year. Stock on market, or buyers have had a lot more choice really for quite a lengthy period of time now. And as we know, price growth and conditions in Melbourne are certainly lagging those other markets. Sydney as well, buyers have a reasonable amount of choice at the moment, with stock on market kind of around historic average levels.
Okay, well, RBA board began its two-day meeting today. They've got their cash rate decision tomorrow. If rates are on hold, what impact might that have on property purchases going forward?
Yeah, it's certainly an interesting one, and we know that the kind of current stable interest rate environment has been a driver of confidence amongst both buyers and sellers. So we know that since the RBA's latest lift in interest rates at the end of last year, interest rates have now been stable for a decent period of time. And I think that that's played into the uplift in conditions that we certainly saw at the start of this year. So we know that price growth slowed toward the end of last year, but re-accelerated as the summer selling season drew to a close in January and February, with buyers and sellers really taking confidence in the fact that the outlook for interest rates was stable, they remain on hold, and there's a lot more certainty around where future borrowing costs are going to be.
Do you think there's a chance the RBA could lift rates tomorrow?
Look, we're expecting that the Reserve Bank are going to keep interest rates on hold, but that they're probably going to be on hold for quite some period of time now. We know that that March quarter inflation data was a little bit stronger than expected, but despite that, retail sales volumes are very weak. Household spending is weak. Consumer sentiment is still pretty subdued, and inflation pressures are heading in the right direction and going to be continuing to head lower as the year progresses. So I think that means that the Reserve Bank are going to remain on hold, and that the timing of interest rate cuts has probably been pushed out with that stronger than expected inflation surprise in the March quarter, but that probably the next move is going to be lower, although it's going to be maybe early 2025.
November this year, or okay, so sometime in early next year?
Yeah, look, I'd be expecting that probably early 2025 is what looks likely at the moment. We know we've got the tax cuts coming through July 1, along with...
Sorry, Eleanor, we've run out of time, but thanks very much for coming on the show.
Thank you for having me.